Are you an investor looking for premium market opportunities? Presenting premium and exclusive service for investors by Kalkine.
FAANG is a popular abbreviation in the trading world. The acronym illustrates stocks of the famous 5 US-based technology corporations. The first is the social media giant Facebook, now known as Meta. Software and hardware developer Apple follows this, and the e-commerce magnate Amazon.com and streaming service provider Netflix. The last FAANG member, internet ace Google, with its parent company Alphabet. Originally, the acronym was FAANG, with just an A for Amazon. In 2017, investors included Apple in the group. There's an interesting fact here. The original 4 FAANG stocks were pure internet-based companies. Still, the later inclusion of Apple, a consumer hardware manufacturer, made FAANG stocks a broader group of giant technology stocks. Amid the earnings-related bloodbath this week, there have been huge losses in some tech stocks. First one on the list is Meta Platforms, formerly known as Facebook. Meta has had a tough quarter and its revenue has declined for another quarter. Meta reported revenue of $27.7 billion, which was down 4% on the same period last year. Its net income had also plummeted massively, 52% to be exact. Meta suffered a massive shock recently when its stock plummeted 25%, obliterating almost $85 billion in market capitalization. Shares are down by a whopping 70% this year. Its market capitalization has also fallen a great deal and now stands at $266.6 billion. Then comes Amazon.com. The company recently released the financial results for its third quarter ending on the 30th of September. Compared to the other tech giants in the group, Amazon's performance was a little better. Amazon grew sales by 15% and was profitable again after 2 quarters of losses. However, its net income decreased to $2.9 billion in the third quarter, or 28 cents per diluted share, compared with $3.2 billion, or 31 cents per diluted share in the third quarter of 2021. Its market capitalization stands at 1.05 trillion American dollars. Next up, there's Apple. Apple has undoubtedly performed impressively well, and its results too were up to the mark. The company reported another record quarter for sales at $90.1 billion, 8% year over year, and net income was also an all-time high of $20.7 billion. Its quarterly earnings per diluted share of $1.29 were also up by 4% on a year-over-year basis. Its annual revenue is also standing at $394.3 billion, up 8% on a year-over-year basis. Even in tough economic conditions, the company's performance has been commendable. Moving on to Netflix, the streaming giant bounced back in its third quarter earnings in an impressive way. The company did defy the forecast and went ahead, adding 2.4 million subscribers. The company reported a revenue of $7.93 billion for the third quarter, which was up by 5.9% on a year-over-year basis. Diluted earnings per share of $3.10, beating expectations. Its market capitalization stands at $131.6 billion. The last one on the list is Alphabet. They reported third quarter revenue of $69 billion, up 6%, but it didn't even surpass the forecast estimations of $70.9 billion. The growth rate has been affected for the last 5 quarters. In the same quarter a year ago, sales grew 41%. YouTube ad revenue also suffered a jolt as it shrank for the first time since the company reported YouTube earnings separately. It fell around 2% to $7 billion from $7.2 billion last year. The company's market cap stands at $1.25 trillion currently. So what are your thoughts? You can leave a comment below, you can like this video, you can subscribe to our channel, and you can press the bell icon for video notifications. I'm Rachel for Kalkine Media.